couple of years ago, we knew the president wanted to let this economy run hot. But again, another example of just how hot he wants to let it run. A rocket ship is the word he uses. How does the market take this?
Well, so far the market's actually now pricing out Fed cuts, so they're actually getting more confident about the economy and a recession not being imminent. That's good news, but one of the things I really worry about is there are very smart people out there that really believe the Fed capitulated to the president when they did the 180 in January. And I think one of the things that we have to take into account is that the Fed was reacting to the very policies that the administration was putting forward. Trade wars, tariff ban, threats on China, all of that wreaked havoc on financial markets and dampened growth. And so now there's sort of a bit of a chicken and egg, which came first. I actually think it's the cart putting it before the horse when the president says the Fed needs to ease to stimulate the economy. The very uncertainty that caused these problems came and emulated from the administration itself. And so it's asking the Fed to offset the administration's own missteps on policy.
Right. David, does anyone believe that QE4 is actually in the universe of the possible?
Not right now. I'm afraid it probably will be the next time we have a recession. But for right now, the Federal Reserve should really do nothing. The economy is living up to its potential. It is downshifting from 3% growth to 2% growth. That is not because the Federal Reserve raised rates. It's because the tax cut was always going to be a temporary boost to growth rates. It's a permanent boost to the level of output, but only a temporary boost to the growth rate of the economy. So it went up to 3%, coming back down to 2%. That's what the economy is doing. If you want the economy to grow faster, you have to do something to increase productivity and increase labor supply. And one thing we saw in this morning's employment report is labor supply actually came down. And that's really the critical shortage in the U.S. economy right now. We don't have enough workers, even if we had more demand. So more demand at this stage, QE4 would not help.